Monday, January 24th. I had a stock battle yesterday. I'm going to start doing this. And I invite, if you want to be part of the stock battle, the next one, message me. Okay. Stock battle. Myself, James Ford, and Nader. Nader, who is my affiliate rep for Trendspider. We had a stock battle yesterday, 45 minutes. The rules were very simple. One stock for the next 2 weeks. And you can write a strategy in Trendspider. I did a strategy. I shared out the strategy. Just so you're aware, I picked MicroStrategy and I built a strategy in Trendspider for it. 1 hour strategy based on the MACD. We're not in yet. So far in pre-market, let's see, MicroStrategy is up 1.14%. I will tell you, probably will get you in today. In the candles today, we'll probably get you in. Am I buying this one? It backtests pretty well. If you see down below the performance chart, 34% versus 3%. And what I showed on the screen was even better. If you go double leveraged MicroStrategy, it gives you over the last, and this is 66 days. So this is 2 months. You've made 61% versus losing 47% in this particular one. You can see it just got you out of a 16% gain right there. This was a 1% loss somewhere in that neighborhood where it got you in at 58.21. You got all the way up to 63. So before you lost it, you could have gotten it. But it's just a strategy that I put on a bot, and at the end of the time, we're going to look at the actual results. But if you want the strategy, it's in here. Hold on 1 second. I got to pause this. But it's in here. You can import it. Stock battle 1 hour strategy. So if you have Trendspider, you can import that strategy into your system. Okay? And you can go follow James right here. He wrote an article on Seeking Alpha about Marathon Holdings. You can go read it. I would urge you, if you have Seeking Alpha, do your boy a solid here. There's one favor that I'm going to ask for you today. Go and comment on one of James's articles. Okay, just go and comment. I think he wrote about the Japan trade. Let's see, analysis. Yeah, will the Bank of Japan hurt markets again? That was at 10 o'clock last night. Didn't seem to hurt stuff, but I don't exactly know where we are. Dow futures are down a little bit. S&P up a little bit. NASDAQ is up a little bit. So go and comment on one of his articles, though. He did a great job yesterday. I honestly, James and I have been commenting on each other since he interviewed me a couple years ago for his own podcast. And so after that, it just came up that we've just been talking. And so stock battle came up. I said, okay, there's one person that I want to do it with. And Nader there. I said Nader was on the left. Nader is on the left. That's James on the right. But go and watch the video and then go and vote. I want you to vote. It's pinned on my Twitter. Okay, just go to my Twitter and go, who won the stock battle? Okay, Gary, James, or Nader? Come on. Hook me up. I'm losing. How am I losing? And FYI, I'm going to turn this into this is just nuts. But Nader went ahead and said, I said MicroStrategy. He changed it and said, you know what? I'm going MSTX. He's not using my strategy. He's just using buy and hold. So the only way I win is if MicroStrategy goes down. If MicroStrategy goes up, Nader's going to win. I mean, I don't care the 1 hour strategy. Nader's going to win if MicroStrategy goes up. Now, Tesla, that could be a huge one. So it should be interesting. Again, it's 2 weeks. That was the rules. Challenge one, just pick a strategy, hold for 2 weeks. And you can trade it for 2 weeks. But I thought it was a pretty good idea. Now, we're going to go over, again, that's James's article. We're going to go over a lot today. There are a few things that I want to cover. First is for the paid subscribers, I found a healthcare stock that is down 32% for over the year. It's turned positive with a gap on the weekly and the daily, turned into a strong sell in the quant to a hold, and it was trading at $72 when it did that. Today, it's trading at $87 worth earnings coming up. Wall Street says it's worth $96 with a 10% upside. I will provide that to the paid members. We're going to go over a lot today. But again, that's for the paid members, and there's a lot more. But go vote on Twitter for this one. This is just TWLO. Killed it. I mean, Twilio's up 20%. And you know what Twilio has been a part of the Alpha Picks portfolio for quite a while. I mean, so my hope is that most of you out there have signed up for Alpha Picks. What is Alpha Picks? Alpha Picks is a data-driven portfolio from Seeking Alpha that provides you 2 articles a month, more than that, but 2 main articles on the 1st and the 15th, and you buy a stock. Twilio is one of the stocks that's in there, okay? And it's up 20% today based on its improving outlook. Now, we can go take a look at the chart of Twilio. It's quite impressive. Let me put this back to the 4-hour because this one dipped. If you go and look at a weekly on this one dipped down. It was a buy the dip operate. Now, here's the thing. The 200 days moving negative. The 200 days at 132. Where's the stock trading? 136. If you can hold over this 200 day, we're heading back to these highs at 343. Okay? The valuation would be absolutely insane to get back to 343. It would. The RSI, 75 right now. That's before it ran up 20%. Okay? The Bollinger Bands, they were cinched up right here for weeks in July. I think this is where Alpha Picks added it. I'm not sure exactly when, but Twilio just killed it. Twilio just killed it. And I'll tell you, I didn't know this, but Seeking Alpha, the premium portion, has a video hub. And you can see top 10 stocks for 2025, top AI stocks, top 10 stocks year-end review of 2024, the latest videos, top dividend ideas, adding trending videos to your homepage, your top AI 2025 stuff, and then top 2020 recession replays, yielding high income with dividend stocks, hedging bets in tech. All of this video. This is their video hub. Quite impressive. I got to tell you, I'm impressed with how Seeking Alpha does this. Now, you may say, well, how do I get this? Go over to the link tree. Okay, the link is down below. It's linktr.ee/daily stock pick. You've got a link. The second link right there is to premium and Alpha Picks. It's a bundle. You save $159. Okay, there are a few things in this world that I like. I love going to Seeking Alpha and just geeking out on it. When you're doom scrolling TikTok, when you're doom scrolling on YouTube, when you're doom scrolling on Twitter, those are all fun things, but you ain't learning anything. On Seeking Alpha, you can actually learn stuff. You can actually make money. That's what I love. Use, again, Alpha Picks. It has Twilio in there, and you can see Video Hub. If you get the premium version, okay, say you just want premium, you get this virtual analyst report. Look, the quant has Twilio as a strong buy. When did it move it to a strong buy? A while ago. At $62 was the first indication that it had a strong buy. Okay? You're trading at $113. In pre-market, it's $135. You've doubled your money since you got that alert. So again, Seeking Alpha, it's the way you do research. It's the way you look at this stuff, and you can get it. You can get it in the bundle, or you can get it by itself. If you want it by itself, then you get $30 off and a free 7-day trial. That is the next line on Linktree. Okay, if you want it by itself. If you want just Alpha Picks by itself, you can get Alpha Picks by itself as well. But I'd steer you towards the bundle. There are a few things that I steer you towards. It's this bundle, and it's Trendspider. Okay, and Trendspider. That's what I used in the stock battle yesterday. I didn't even use Seeking Alpha at all for that stock battle. I used Trendspider. We'll see how it turns out in 2 weeks. Maybe I'm up like 30%. Maybe I'm up 20%. Maybe I'm up 10%. 2 weeks in MicroStrategy, you needed a big mover, I thought. But get any one of these and you'll get my 4-hour algorithm. Plus, you can import the 1 hour off of yesterday's stuff. So if you want that, all of that, again, those are the tools that I use personally. And I think it's important because I've been getting a lot of questions. Hey, I just got a bonus at the end of the year. What should I do? Should I put it in cash and dollar cost average my way in? This is the story of Bob, and I try and go over this at least once a quarter on this podcast, okay? Bob is the world's worst market timer. This goes on this article was written in 2014, okay? His plan was to save $2,000 a year during the 1970s. That was a very bad time in the market, okay? He'd retire at the end of 2013. So $4,000 a year in the 80s, $6,000 a year in the 90s, and $8,000 a year until he retired. Bob bought at the absolute high, okay, in every market. Every market. The market dropped 50% right after he did in 1973, okay? Bob didn't feel comfortable. He waited until 1987 after a huge bull market. He bought, okay? The point is, Bob still managed to retire a millionaire. Time in the market beats timing the market. He bought at the all-time high, but just kept it in even when it was down 40%. So even though you may think, and I talk about this all the time, at $533, the Qs, little bit expensive. Not crazy, but a little bit expensive. If we go and look at a weekly on this, your MACD's extended at 63. Your MACD is up here at 14 points above the oscillator. The RSI is extended at 63. You can see that trend line that I drew, and that's from the COVID lows right there back in March of 2020. And we pulled right back. You had a great bull market in 2021, and then the legs fell out. And did you buy during this downturn? Because even if you bought during the height right here at 396, you're still doing well. So understand what's in your portfolio, how you're building your portfolio, what your goals are, and what your time frame is. If you are 63 years old right now and looking to retire, and you need to put money into retirement, you can go and do it right now. Time in the market, you have a full-time job. If you can't dollar cost average your way in, or you don't want to do it, every Friday, just go and buy it. That's it. Okay? I wanted to put that one in there just because I do think that's important. Go and read this article. It's going to be in the newsletter. Now, to inspire folks, okay? I love this clip. This clip, it's why I think Zuckerberg and Meta is such a good investment. The culture there. And Zuckerberg still believes like this. Overall, here's the story. This particular person, he was employee like 40 at Facebook or something. And Zuckerberg came to him. They were still building Facebook. I don't know what employee it was. Maybe it was 1,000. Who knows? But he was talking about how Mark came to him one day. And, nobody was giving him direction about what to do at Facebook. And Mark came to him one day and said, I think you should build a search engine. And he goes, I've never built a search engine before. Mark went to him and the response was, well, nobody ever built Facebook before I built it either. The point of this is they still have a startup culture. They are still hungry. And I think Zuckerberg still holds that basic truth within him. If you can get this stock under 600, buy it. It's at 636 right now. I don't think that your time frame should be within the next 3 weeks to trade this one. We just got over this hump of 550. If we're going to see a pullback in the Qs, it should pull back here. You can see this buy right at 615. That's a trigger in the 4-hour algorithm. The MACD on a weekly has reset. It's not as high as it was when it was trading up here at $510, but don't you wish you bought it at $510? The RSI just going sideways. It's setting up for another move higher. And they have earnings next week. What's been moving the market? It's earnings. So there you go. Watch this clip as well. Read the Bob article, watch this clip. We did finally get an executive order on crypto yesterday. What did it do to Bitcoin? Pretty much nothing. Let's see. We go BTC USD. And then we pull up the Coinbase version. This is just Bitcoin. And you can see 109,000. We're having that resistance level at about 110,000. Okay, that's the resistance level that we have to get over. I would have thought that there would have been something in that executive order that would have pushed this over. Well, it didn't, because it's kind of a half-assed bill, executive order. It does some good things, but it doesn't go far enough. And so the community, the Bitcoin community was like, remember, part of the order, and this is what it goes over. This is the good and the bad. And so this is a great thread to actually read if you're in Bitcoin. Am I getting out of Bitcoin? Absolutely not. Am I going to trade around in MicroStrategy and MSTX and CONL, Coinbase, double leverage? Yes. But the point is, it's prohibiting the crypto has to be created in the U.S. And Bitcoin wasn't created in the U.S. So Bitcoin went down. It's trading right now at, let's see, $105,000. So we can look at IBIT. IBIT is down below 60. It's up almost 2% today in pre-market because we're only at 9:26 in the morning. But it got you in at 56.41. And so you're at 60. It's almost a 10% move since the algorithm got you in. Almost. We're trading sideways. When you look at the weekly on this one, we still don't have a 200-day. We just got the 50-day. Again, this is only a year old. So we only have about 52, 53 candles on this one. It's not long. IBIT. It's BlackRock. We're going to go over BlackRock later when it comes to AI because they just made some moves. Again, I like this particular thread. Read up on it if you own IBIT or if you own any crypto. If there's stuff in there that you already know, kudos to you. Cathie Woods, all in on Tempest. All in on Tempest. And you know, when she got in all in on? Yesterday, after its huge move. Okay, it was up 8% yesterday. This is TEM. And you know what started the move in TEM? We can see algorithm got you into 35. Okay, it got you in January 17th. That's what, 7 days ago? Algorithm got you in. And you're trading at, let's see, in pre-market, you are at 54. It's a huge move. What happened? It was Pelosi. You can put this on your Trendspider chart. You can get alerts when Pelosi trades in Trendspider. They will alert you. And the Pelosi trade happened. Imagine being instantly up 60% on a trade just because the world found out you were in it. So she bought down there at 30, and she's immediately up 60% on a trade. Power. Supermicro receives buy rating on NVIDIA Blackwell ramp from Loop. I don't know that it's SMCI. I don't know that it's Dell. I don't know that it's HPQ. SMCI has a strong sell in the quant. And the reason is they still don't have an auditor. The valuation has gotten significantly better. The growth has gotten significantly better. The profitability, they still have gross profit margin problems. That's it. The momentum has sucked. The revisions suck. Am I taking a chance on SMCI? Well, Loop Capital thinks that, yeah, it's worth a chance. Let me see if they put in a price target. I don't see a price target. It might be in there, but I just don't see it. It doesn't pop out at me. Yeah, price target in a Thursday note. That to say, while we have conviction in our $40 price target, there is some possibility, given Blackwell ramp and tier 2 purchasing patterns, that getting there isn't a straight line. It might not be a straight line. So they're putting in kind of the caveat, hey, we believe it's worth 40. Right now it's trading at 33. That would be a nice big move. And I've drawn, this looks like a spaghetti chart, okay? Let me explain what I've drawn here. This was a 4-hour chart where you saw clearly resistance right there, turned into support, okay? It turned into support right there, turned into support right there. Then what happens? We broke support, okay? And it goes down. We had this nice little move. See how it broke that green line? It broke that green line. You get out. You get out when there's that trend. You just get out. That's it. You've just got to get out. And so if you go and look at a weekly on this one, We're still out. We're still out. You shouldn't be in on this one. They don't have an auditor, but that's me. Loop Capital thinks it's worth 40 bucks. Might be worth a little risk. Let's talk about this one. This is a great article. Okay, a fantastic article about semiconductors. This is an interview with a current Micron MU high-ranking employee in detail the role of memory and AI and NVIDIA. This was a great thread, and he's got the first point there as well. I thought this was fantastic. Fantastic. Let's go over a couple of other things. Josh Brown just posted a couple of new of his top stocks. Robinhood is just, and he said, hey, it might be a bumpy ride, but with deregulation, with things, he just thinks that Robinhood is a good one. We can go and look at it. I don't like Robinhood. And full disclosure, I'm just biased against this one, but I have been completely wrong. Completely wrong. The only thing against this is valuation. That's it. That's it. The PEG ratio is high. But again, if they can keep up their growth, then that just doesn't matter. And they are continuing to grow. We can go and look at Wall Street says they're worth 49 bucks. You're trading at 50. Don't think that's worth it, but he does. The next one, EMR, Emerson Electric. Okay. Wall Street says it's 139 bucks. He agrees. This is robots. And he's basically said it's one word. It's robots. This is a Trump trade, not terribly extended. You can see the valuation's a little bit extended, not crazy. The PEG ratio's 2. Doesn't like the sellers just aren't showing up is what he says. And we can take a look at the chart on this one. You see, kind of nice moves. Year to date, this one's up 6%. Over 1 year, you're up 36%. EMR, it's an industrial. He liked this one. Let's go over and look at EMR in the 4-hour, just so we're aware of this one. Algorithm got you in at 121. Trades pretty well. You make 47% versus 35% buy and hold. I like it. I like this one. The next one that he brought up, and he did say, this is my notes, barely made the list, but it's on there because it's beaten down, not breakout, but wait until it hits the all-time highs. Did he say beaten down? Yeah. I think he wants it to pass this again. He wants it to pass this 420 point. It's trading at 413. He said basically this was a beatdown that was, it's outperforming ITB by a lot. And we can go and look at Home Depot, and we'll chart it against ITB. We'll just look at Home Depot. It's a hold in the quant. Valuation is bad. Growth is bad. But that's the housing sector. And if we just select symbols, ITB is the housing ETF. I think I still own this one, to be honest with you. But we'll update the chart, and let's just look at it together. Come on. There we go. And you can see the ITB over 1 year. ITB is up 12%. Home Depot's, it just crossed it, and it's up 19% over 1 year. We can look at 3 years. Let's see if it does 3 years, how long it takes on this one. But those are the three stocks. So, yeah. Yeah, that's it. I think that's it. We're going to go over Clover Health now. Social request before I get to the paid stuff. Clover Health. So, Brian, I'm curious your thoughts on Clover Health. He emailed me. You can email me anytime you want. I picked up 100 shares last year and have held and watched it. I caught onto it after seeing some of the cloud-based software they are involved in and where healthcare is heading in that realm. But it was more of a lucky guess than good due diligence at the time. So let's look at Clover Health, CLOV. Full disclosure, it was a SPAC. This was a Chamath SPAC. I'm not a fan of SPACs. It has been a long enough time, and Chamath is out of it. But you can clearly see, let's see if we can pull this back a little bit. I think that's it, yeah. Clearly see that it's $10 right there for a little while. Held up there, pulled down. It's now trading at $4.63. From a chart perspective on this weekly, The MACD seems a little bit extended, but not crazy, but because you're seeing the MACD cross up on the signal line. That blue line is crossing up on the signal line. Now the RSI is extended at 71, but you've just gotten above your 200 day, okay? Your 200 days at about 3, it looks like. We're going to pull this in. It's right at about $3.15, $3, somewhere in there. But your Bollinger Bands have just cinched up, and you're trading at the top of it, which indicates to me that you're probably going up. You're probably going up. The 50 days moving up, 200 days still moving down. Let's go over to Seeking Alpha. And because it's a long-term hold for you, we do have to look at, some of the valuations. This isn't one that you just got into and you're trading. It sounds like you want to hold it. Strong buy from the quant. Valuation, bit stretched, they're not making money. But we can go and look at their financials. They're making $1.3 billion. That's a lot. They're just spending $1.7 billion. I don't know what they're spending on, but that's what they are. I don't know enough about the company. It's ranked number 1 out of 10 in healthcare. Oscar was one that I actually, that my current company that I bought. Let's see what Wall Street says. There's 4 analysts that cover it. They say it's 467. So you're trading right there. I mean, you're trading right where Wall Street has it. So, Brian, it's not in my realm of loves, but the quant loves it. The long-term chart looks like you're going. Again, if you hold on to that $3, then I think you continue to move higher. Is it, would I be holding this one? I just don't like healthcare. I mean, I'm just not a healthcare guy. And, Oscar Healthcare, you can look at Oscar. This one was a crazy, crazy move last year. 1 year, it's up 46%. 5 years, this one's down quite a bit. I mean, Oscar Healthcare was one that just moved last year for some reason. It's $19 price target. That's an 18% upside. But am I getting into this one? I don't know. I mean, year to date, Oscar Healthcare is up 21%. Healthcare's doing really well this year. The 2 sectors that were beaten down last year were healthcare and I think financials did well last year. Not financial, but energy. Energy, I think, is popping up. So there's your look at Clover. Am I telling you that you're crazy? No, I don't like SPACs, but it's not in my realm. And sometimes you do get lucky in this sense. And it might have just been a beaten down stock, but they're still not making money. Let's see if Oscar is actually making money. $8 billion. They're spending $6 billion. Yeah. So you look at the valuation. Forward PE is 179. Still expensive. So it's still super expensive. But, again, if they have the growth, the growth is what you want to see. And it's 51% revenue year over year growth. So it's a good one. Okay. The rest of this is going to be over on Substack. So if you're not subscribed to Substack, go subscribe. I do try and give the paid members a little bit more. I gave you plenty here. So go over there and look. Okay. Take care. See you Monday.
Every morning I wake up to the sound of the trading bell.